Hello and welcome to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the weekend of September 4th, 2013, the conventional mutual funds industry saw fairly light outflow activity this week. Let's take a look at our macro groups and see what happened. As you can see, equity funds and taxable bond funds both had fairly light inflow and outflow activity. The one heavy area was municipal debt funds. Even though they have $1.8 billion in outflows and it was not the largest, it continues to be a source of pain for investors. Money market funds, meanwhile, had outflows of about $2.6 billion. Well, let's take a look in some greater detail at those numbers. Let's start off with equity funds. Again, with about $800 million in net inflows this week, activity was pretty light. Might attribute it to the late summer, the people taking vacation and thinking of other things right now. Maybe investors are still a little confused and concerned about what's going on with Syria. Regardless, $800 million is roughly a rounding error to this industry. We saw the market up about 1.24% for the week. Again, that came despite concerns about what the U.S. was going to do in Syria. The one area that investors continued to plow money into was the international multi-cap core area with about $500 million in net new flows. A lot of that is still attributable to Oakmark International, which continues to take in good inflows from investors all year long. Large caps were generally out of favor, though, with investors. They saw a total of about $500 million in outflows this week, so investors continue to be skeptical about domestic large caps. We'll see when they start to change their minds about that group. The next group to take a look at is equity ETFs. They had about $5.9 billion in outflows. Perhaps investors in this unit were a lot more concerned about politics in the Middle East and where the U.S. was going with its policies. Overall, we saw most of the outflows due to SPY, which is typical when we see good weeks of inflows and outflow activity. iShares Core Midcap also had outflows about $1.5 billion this week, and we're wondering if there might have been a little arbitrage opportunity out there because one of the better selling for funds this week was a Russell 2K, the IWM, which had inflows of about $300 million. Well, moving away from equity ETFs, let's also look at taxable bond funds. Again, with about $700 million in outflows, things were fairly light this week. They come despite 2 weeks of positive performance, so we're maybe at a point where investors are starting to feel a little more comfortable with taxable bond investing. Loans continued to take in the lion's share of flows this week on the taxable side, though with $700 million this week, it's less than half of what we saw them putting up just a few short weeks ago. IID, the intermediate investment grade funds, they also saw outflows for another week, this time about $600 million. Being one of the larger categories at Lipper, this is a very small figure and not one that we're typically concerned with. We also saw the high yield and emerging market areas also with outflows this week, as investors are still skeptical about the direction of developing markets. Well, let's take turn our attention to fixed income ETFs. Here we had inflows of about $200 million this week, again fairly light. Most of that money was going into the specialty groups. In fact, the best one this week was the ProFunds Ultra 7 to 10 year Treasury. It took in some positive numbers this week. Elsewhere, the general theme was outflows from some of the larger groups like high yield. So, for example, HYG had outflows of about $176 million. JNK also had outflows about $125. Then at the top, we actually saw LQD with outflows of about $225 million. Overall, fairly light, uninspired activity by fixed income ETF investors. The real activity, though, was saved for municipal debt funds. Again, they had about $1.2 billion in outflows this week. This is the 15th consecutive week that this group has had outflows. About $30 billion has been yanked from them year to date, so investors have really started to worry about what's going on in the municipal debt market. And unlike past episodes, and I'm thinking of Meredith Whitney's call on the municipal debt market, this seems to be in a spiraling stage right now where more outflows beget worse performance in the market, which might inspire more outflows by additional investors. So things are really looking difficult for municipal debt funds right now. All types of municipal debt funds have suffered outflows this week. We don't need to go into detail because it's all just red out there. The last group we're going to take a look at is money market funds. With about $2.6 billion in outflows this week, we didn't see a whole lot of attention being given to them. Despite the outflows from a number of other groups, we saw a little bit of inflow activity from retail investors this week, about $1.8 billion. So maybe some of that outflow from municipal money market, municipal debt, as well as taxable bond funds might have ended up here as investors are keeping their powder dry. The institutional investor, on the other hand, took out about $4.4 billion this week from their cash accounts. Well, that'll do it for this week's analysis of fund flows. Please join us again next week where we'll tear apart the flows activity in mutual funds and ETFs, or join us online at any time at lipperusfundflows.com. Thanks for joining.